Well, your overall view on the markets at this stage, because it seems things are pretty temperamental right now.
Absolutely, Alishia. How are you? First challenge is that I think that what we're seeing is basically what generally happens in the Nigerian market just before an election. In another 2 weeks, we should start with elections, and investors are beginning to feel some form of jitters ahead of that. I think it's also important not to discountenance the impact of foreign investors in the market as well at this time. We're seeing major sell-offs across global markets. It's unlikely that Nigeria was going to be saved from the impact of those sell-offs. Now, the interesting story for Nigeria is, in addition to the global challenges, the local economy itself is reeling under the election blues, So a lot of selling is happening right now. If you read the local dailies, people are insinuating that perhaps some politicians are taking money out of the market to fund their campaigns. But the reality is that from now till, I would say, middle of April, you would continue to see this kind of trading in Nigeria.
So the elections and the prospect of what's going to come to the fore there posing some kind of headwind at this stage. At the same time, as I was saying in the news, we've seen the courts halting this planned sale of Bank PHB by the Central Bank of Nigeria. Implications of that move and that announcement now on the M&A process within the banking space?
Alishia, I think we all expected that at some point there will be resistance from existing shareholders on the process. Now, what will generally happen is that these cases would actually go through the process, and if it appears that the central bank and the existing management of these companies are on very solid ground. However, the legal process has to take its course, and that will continue to actually put a dampener on activities around the banking sector in particular. I mean, it's no surprise that virtually all the R8 banks, suffered significant losses yesterday, and I would expect that we'll continue to see a lot of pressure until there's clarity in terms of where the market is going, and the way we're going to resolve these legal cases around the banks. So something else, Alishia, is that there are just so many things that are happening, and it looks like all the headwinds are just moving against the market at this point in time. You've talked about the currency, and I'm actually a bit worried. I did see the inflation numbers coming out from the FOS, and those numbers look a bit suspect, because you're wondering what really happened in 1 month to warrant 100 basis points dip in inflation, whereas the major cost drivers continue to rise. Currency is still very weak, and it has weakened significantly from same levels 12 months ago. So I think that when you look at Nigeria from a holistic perspective, the pressure on the market right now is seemingly justifiable.
Okay, justifiable in that quarter or in quarters as a whole, where we've got this risk of inflation moving forward and the credibility of data coming to bear. How do you see this influencing movement within the fast-moving consumer goods space, specifically, Femi, that has proven to be pretty defensive through it all?
Well, I still think that FMCGs will continue to be defensive. I mean, Alishia, it's the most talked about thing. Nigeria's just sheer population means that people will continue to spend. There are some shopping malls in Lagos that if you went there from a Monday till a Saturday, there's always a traffic build-up because people are just buying. I think the buying power of the market is still very strong. However, with inflation continuing to creep and wages not growing as a result of the global economic crisis, I think something is going to give at some point in time. Now, the key drivers for inflation that we are even concerned about are the imported inflation numbers that Nigeria is going to have to grapple with. With the currency getting weaker by the day, and oil prices continuing to rise, and Nigeria continuing to import fuel prices, it just appears that the stage for a strong inflationary environment is just set. And I don't envy the central bank or the MPC at this point in time, because their job is a very difficult one. Defending the currency, ensuring that you can keep inflation within check, and also trying to balance that against a growth prospect that is looking quite bleak at the moment.
What's your outlook on the interest rate front, Femi, where, as you say, the central bank has a pretty fine line to be walking at this stage?
Well, there are two things that will drive inflation, interest rates going forward. One is obviously the inflation outlook, but secondly is also the currency. If we continue to see the kind of low inflation rate environment that we've seen in the last year and a half, it was apparent that at some point in time, the currency will start to pay for it, because there will be a flight to safety or a flight to quality, if I could describe it as that. Investors will be looking for higher yields, and that would put pressure on the currency. So it's obvious that the only direction for interest rates in Nigeria is definitely upwards. Especially if the central bank wants to continue to control inflation, wants to manage the currency, because we've seen the Naira actually reach levels never seen before at the official market. So it's an interesting scenario from an interest rate perspective, but I think that the direction, and if you speak to the bank treasurers, the direction everyone is thinking right now is just upwards.